Hello, we are going to take a brief look at the markets. This video is not scripted. I'll only look at the charts. We briefly look over them and see what the current situation is. Let's go to screen share. I'll go from the small time frames to the big ones simply because that's the order in which I have the tabs open on my computer. Okay, let's look at it. So, share, screen. Now, let's look at the first chart. Okay, that's the 10-minute chart. I won't go into this one because it's on a too small time frame. Let's just fix my video a little. Well, I should be more in the center of the screen now. Okay. Let's take a look. So after the 10 minutes, we get the 20 minute and now the 30 minute. I'll start with the 30 minute. So you see that you had quite some pumps. Here was the last big one, then you had a smaller one here, and now you have the last one. So 3 pumps, everything looks bullish on the 30 minutes time frame. Let's go to the 1 hour time frame. So here you did hit a 9. You should expect a 1 to 4 candle correction, then lower. However, we just get a confirmation with a candle 3 trading higher than a candle number 2. So it is bullish and you are above all the moving averages. Stop and reverse is also lower. So everything is bullish on the 1 hour. 2 hours, you have a 9. Here you have a 9 too. So let's put some arrows. You should have 1, 2, 3, 4. A correction at least for 4 candles. I don't know how deep we can go. We could go as deep as here at least. And then the continuation of the trend, maybe. Yeah? You have to reevaluate, but there should be a small correction on the 2 hour time frame since we are on the 9. If not, apart from that, everything looks bullish. And for the pumps, here's the Darth Morph candle. I think that's how you call it. And then you have 2 more pumps following that one. Let's go to the 3 hour time frame. So you see the same thing and you are on a 6. So the 3 hour is still bullish. Above all the moving averages too. And even the setup trend line. So everything is bullish on the 3 hours. 4 hours, you did hit a 9. Normally you should have had a correction, but there was no correction. You know that there's no correction when you have a new candle trading above the last one. So here was 2 trading above a 1. That's the confirmation that there's no 1 to 4 candle correction and then higher. Sometimes the 9s get ignored by BTC activity. 5 hour time frame, you did get a 9 too. The same thing happened here. You now have 2 trading higher than the 1. So it ignored the 9. There was no correction, 1 to 4 candle correction on the 5 hour time frame. Let's go to the 6 hour chart. 6 hour chart gives you a 9 too. So that makes a lot of 9 in my opinion. Here you should get again 4 candles down. We could go as low as that. It's totally possible. 1, 2, 3, 4. Here. And then maybe the continuation of the current trend. You manage to get above all the moving averages, and the stop and reverse is below. Here's a setup trend line. Maybe we'll get that high. I doubt it, but maybe. Let's see. You have only the moving averages here with the stop and reverse. So you see that stop and reverse turn down, then up, then down, and now they're up again. Everything points up. Here you have a golden cross. You may get another one, but on the small time frame, even on the 6-hour time frame, it's not that a big deal. But if we go up high, we will get more crosses. You see that the long moving average is pointing down or flat. This one starts pointing up. This one and the 3 short ones are pointing up. So it shows some strength in the market, but I'm not sure that it will last. If we look at, that's important, if we look at the Bollinger Band, we did get above the Bollinger Band, we broke out above, so we should get back in again. So, that's why if you are trading smaller time frames, well, they all told you to go bullish. I haven't shown you when, but I think you know when it's the case. It's when a 2 trades higher than a 1, or a 3 higher than a 2, or 4 higher than a 3. So they all told you to go bullish if you trade a smaller time frame. But if you did not enter a bullish trade, I would not enter now, because we are already above the Bollinger Band, the upper Bollinger Band, and we should go back in at least this area. So, well, they can go up too, but I don't think there's enough strength in the market. So I'm expecting it. I'm expecting us to go down back into the Bollinger Band. Just as here we broke out, and then we went down back in again. And then we tested the middle band. So now we could go back in again and then test the middle band too. Maybe it will hold, maybe it won't. But that's possible. We're looking at the Bollinger Band. Here you have MACD. MACD told you to go bullish a couple of days ago, maybe 1 or 2 days ago. And since then we are bullish. If that's the indicator you are trading, then you are in a long trade. Shorts and longs, the shorts are still high, but the longs are picking up. But the shorts are still very high. So even with the last pump that happened, shorts are quite high. Here you have candle number 9. So the same thing as always. Expect 1 to 4 candle of downtrend. So 1, 2, 3, 4. 1 to 4 candle of downtrend. Then maybe the continuation of the uptrend. But expect a little correction. As you see, this is maybe, I don't know which number 9 that is. That is, we are now on the 8-hour, and that's the 1, 2, 3, 4, 5, 6. The 6th, there will even be a 9th candle number 9. So there are a lot of candle number 9s on the smaller time frame, indicating you should take profit. You should get out of your long trade if you are in a long trade. Here you have the last candle number 9 on the 8 hours. As you can see, we did not manage on the 10 hours to go higher than the last moving average, the 200 MMA. We did not manage to go above it for now. Every time we tried, we did get rejected. Not that hard for now, but since we are on a 9, I'm expecting more down trend. Let's put the 1 to 4 candle correction. Could get us at least here. 1, 2, 3, and 4. Yes, that's fine. And then the continuation of the uptrend. Maybe. You have to see. 12 hours is on a 5 of a 4. It told you to go long here when the 3 was trading higher than the 2. And right now we are on a 5. We are sitting on the moving average. That's the 128, I think. I can check it for you. But that's the 128. Yes, we are sitting on the 128 moving average for now. And the 200 MMA is above. And then you get the setup trend line, which I don't know why it stopped here, because there's a new setup trend line. Okay. Well, anyways, maybe we'll touch the next moving average. Maybe we won't. I don't think we will, because there are too many 9s. 15-hour, you are on a 4 green for a green number 4 candle, and it told you to go bullish when the 3 was trading above the 2 for the 15-hour time frame. And here we are also sitting at the 128, just below the 128 moving average. For the 1 day, it flipped into a green 1, so there might be an indication of going long. If we go higher than this candle, I would only, if that's your time frame, I would put the indication of going low, just not at the candle top, but at the top number 1, the triangle. I would use the triangle to go long. But since this pump is quite hard and we have all those 9s, I'm not sure that will happen, or that's yeah, well, I'm not sure if that would happen, but it would tell you, if that's your time frame that you are trading, it would tell you to go high, to go long, just as told you to go long here. Okay, let's take that off again. The 2 days, no, that's the 1 day still, only the moving averages. If you look at them, you see that the 7 moving average is picking up. The other ones are flat or pointing down. So that's quite bearish. Stop and reverse are going down, but they were knocked out right now. So stop and reverse is bullish on the 1 day. On the 1 day, we managed to go higher than the middle Bollinger Band, and we have to close above the middle Bollinger Band. That should be possible today, and then maybe we could have as a target the upper Bollinger Band. But the upper Bollinger Band is at 7,200. That's quite high. I'm not sure that there is enough strength to go that high. 1 day in MACD told you go bullish yesterday. Um, 2 days told you to go bullish today when the 4 was trading higher than the number 3 candle. Right now, you have here a setup trend line of a stop and reverse, and then you have the first moving average and then the other ones. And here is a setup trend line from a 9. So there's a lot of resistance, and you still did not take out the stop and reverse. So this one does not, 2 days is not looking that bullish. Even if we manage to have number 4 trading higher than number 1, we told you to go long, but there's a lot of resistance just above us, as you can see. 3 day, we flipped to a green 1, so you have to wait for a green 2 trading higher than the green 1 if that's your time frame to go long. Same thing as with the others. Every moving average is below, apart from 2. I don't know why this 200 MMA, I think. Yes, it's a 200 MMA. So the 200 is below, and the 7 EMA is below. But apart from that, every moving average is higher. Just excuse me for a second. Yeah, we should be back with audio. So here you have a 1 that's you have to wait for a 2 trading higher than a 1 before you can go bullish on the 3-day time frame. Now we have the 4-day time frame, and that's where I'll draw 2 triangles. They are both very bearish, and depending on what points you put, I think it should touch at least 2 times upper, and yeah, so you can draw a triangle. It should touch at least 2 times, if not more, or 3. Now I think it should touch at least 3 times. I have to check it. I don't remember. I think it is 3 times that it has to touch. So if you draw it from here, it touches once here, the second time here, and the third time here. That's a green triangle, and we are nearly touching it. If you draw it, the triangle, if you start it from here, you touch once, twice, 3 times, 4 times. 4 times. You touch it 4 times, and you still have some room before you touch it again. Those triangles break down, as Tonray says it, 75% of the times they break down, and the target is the height of the triangle. So if it's this one, it's that, and if it's this one, it's this. Anyways, if you look at that, it tells you that there should be a correction of 50%, and that you cannot go much higher, since you should not break out of the triangle. You should keep in it. So I don't know which one is the better one, the green one or the gray one, the brown one that I draw, but one of them is right. Everybody draws the triangles, it's best fit, so everybody draws them a little different. But anyways, they are very bearish indication, and we should not go much longer looking at the triangles. We should not go much higher looking at the triangles. We should break down. The 6K line hold a lot of times, once, twice, 3 times, 4 times, 5 times, 6 times, 7, 8, 9, 10, 11, 12, 14, 15 times. If you look at the 4 days time frame, that's a lot. And there should be a moment in time where it won't hold, and then we should go much lower. Look at the silver chart, as Tonray tells you, and the same thing should happen here. If we break out of these triangles, of the green one and the brown one, and we manage to take out the prior highs, that line, then it would be bullish. If we go higher than this line, we would be bullish. The bear trend could be over. I'll think again about it once if we manage to go that high. So we should go to 7,644 to be bullish. I'm not sure that is possible, that we will manage to do that, but if we do, we could be in a bullish scenario, and the bear market could be over. It could be. I have to think about it again once we manage to close above that line on the 4-day chart. So I don't think we will do it, but if we do, then I probably think that the bear market is over. 5 days, you are still bearish. So since red number 3 traded below red number 2, so you are bearish on the 5-day, and on the 6th day you are on a red number 1, so there's no trade. There was no trade last candle, and there's no trade this candle, and the candle before there was no trade. Before that you went bullish, but then you flipped to bearish since you went to a red number 1. There's no short and there's no bullish. You have to wait for the 6-day chart. For the 1-week chart, we have a 2 trading higher than a 1, so that's actually quite bullish. That's not bad at all. But then again, here you had also 2 trading higher than a 1, and we crashed just after. So this could be the same thing here. We could have a 2 trading higher than a 1, and then we go much lower. One week, the moving averages and stop and reverse. Some of them are pointing still up. Others are going sideways or down, pointing down or sideways. So I would say that 3 are going up and 3 are pointing down. Stop and reverse are on top, so that's bearish. Just as it was from here to here. Then we did get a couple of weeks where there was a bullish stop and reverse situation, but now you are in a bearish stop and reverse situation again on the 1 week. The Bollinger Bands tell you that we are going up again and that we might hit the middle Bollinger Band, which is just under 7K. We might hit it. That would be a target, quite realistic target to hit the middle Bollinger Band. But I don't think that we will manage to close on a candle higher than the middle Bollinger Band. Here we tried. We had a candle that pierced the middle Bollinger Band, but then we went down again, and it did not. Yes, actually it did close. It did close higher, but it was not all above the middle Bollinger Band. So we fast got below it again, and then stayed under it. We stayed under it actually all that time and all that time. We are more or less under the middle Bollinger Band since this week, since the 29th of January till today. So since January, we are under the middle Bollinger Band, and I don't expect us to go higher right now. If we manage to have a candle above the middle Bollinger Band on the 1 week, that would be a bullish indication, and then we would hit, and then we could hit the upper Bollinger Band. But I don't think that will happen. MACD is actually going bullish. last week, or no, actually this week. Last week I can't say, but look, it is bearish since here, and it was bearish all the time until here. Then you were still under, so it's bearish, 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 bearish. Here you had one bullish wick, then you have one bearish wick. Then this week you can say tell because they are at the same place, and now you have one bullish wick again. But you are still very close, and it could be just a spike above before we go below again. That's what I'm expecting. The 1 month chart tells you that we are on a 2, and the 2 did not trade lower than a 1, so there's no bearish trade for the 1 day. But when the 2 will trade below the 1, it will be very bearish. Also, we are higher than the moving average, and what we should see is touching this moving average, and that moving average is the 50 MMA, and it is around 3,794. So we should touch that one. Looking at that chart, that's what it tells me. We will see if that happened, but it is in the charts. And we are bearish, we are below the stop and reverse. If you look only at the moving averages, here you had death cross, and there's not much to say because there's not much on the chart. Here you have the Bollinger Band on 1 month, and we are sitting on the middle Bollinger Band right now. But look, in the last bear market, we went under the middle Bollinger Band. So that was 2014. And I'm expecting the same thing to happen in this bear market, that we go below the middle Bollinger Band. So the middle Bollinger Band right now is at 6K, and we should go below it. If you look at MACD on the 1 month chart, it is bearish since the 1st of June, and no signs of picking up. Okay, we went through all of them, and we are back at the 10-minute chart. So I'll call it a day. Not really, because I will do the same thing in French and then in German. I'll also, if I have enough energy and time, I'll make a video, which I think is quite important. I don't do it right now because I want to be apart, to stand out. So I'll do a video about my 8 most important trading rules, mistakes you easily make when you trade. If you do not trade, those trading rules do not apply. But if you do trade, they, in my case, they do apply. You always have to trade. You always have to have a strategy when you are trading, or even if you're holding, or if you're dollar cost moving averaging. Then also you always have to have a strategy. You always have to know what you are doing. And so I'll do a video about that, my 8 most important trading rules. I'll talk about them one after the next and tell you what I mean by them and why they are important. I'll make that video just after this one, if I have enough energy and time to do it. See you maybe later. Bye-bye.